If you want to know how to catch amazing trades like for example this one for 1-to-5 risk-trade ratio with my simple SMC strategy, look at this video because this is the full trade breakdown where I'm gonna explain you how to analyze my chart from A to Z. Okay guys, so just to start, what we need to look for first. First of all, we need to identify our higher time frame structure. So we need to know, are we bullish or are we bearish? In this case, this is Euro JPY. As you can see right here, as we're breaking the highs and we're creating higher highs multiple times, we are in a bullish trend. And it's as well pretty much visible when price is just pushing to the upside. So, when we identify that we're bullish, we need to identify our last break of structures for having our trading range. In this case, we had a break of structure to the upside exactly right here, but afterwards we had another 2 candlestick pullback. When we were at this area, okay, let's go back in this time. Right here, when we were in this area, this pullback is way too aggressive. If you consider this as a valid pullback, you might get swept if you have this as your new range and you think that this is a new break of structure. However, when you have a second aggressive pullback, this is when you can think, oh, okay, we're getting aggressive. There's likely more chances price to just continue to be aggressive than to go down here and then push up, right? So one pullback right here at that time was not enough, but then we created another aggressive pullback, as you can see exactly right here. So we can actually identify our current trading range. So one pullback not enough, 2 is enough. So in this case, you can have this range and this range. It's really small. If you just consider this range and this as liquidity, it can be valid too. But overall, this structure needs to be acknowledged now. Then you take your Fibonacci from the bottom to the top and you're gonna identify all your valid points of interest in that bullish range. Your points of interest needs to be below the 0.5% of the Fibonacci. If you don't know how to identify a valid point of interest, don't hesitate to watch my video that I made on For Traders YouTube channel. Basically, it's gonna be in the description if you don't find it, but it's just on For Traders YouTube channel if you click on our channel. So our valid POIs right here on the 4-hour are this 4-hour POI right here, and as well we have this 4-hour POI in the bottom right here. Of course, this POI is better. Why? It's because we have, first of all, inducement and liquidity above it, so we have more chances to sweep this low. This is a trap, and then instead we just mitigate here and push higher. But it doesn't mean that this is not valid. It just means that this one is stronger, and that's it. Then you can as well go on the 1 hour to see if on the 1 hour time frame you have something else. In this case, yes, you do have another 1 hour POI right here. If you zoom, you'll see that it's connected to the fair value gap right here, so it's a valid POI, and except for that, we don't have anything else. So now let's just play the price action and see what's gonna happen. So first of all, we tapped into this POI, but we completely destroyed it. As you can see, we tapped into this 4-hour POI, but we destroyed it because we basically just closed below, as you can see. And now this POI is reacting. This was another trade that I had. So after this break of structure to the upside, there was another entry opportunity, but this is not the trade that we were focusing on today. We had a trade right here that was a 1-to-3 risk-trade ratio, but let's ignore this trade and let's wait for the one below because this is the one I want to break down. So in this area, basically to just do a really quick breakdown, we had this 15-minute POI. It was not a good risk-trade ratio enough, so we waited for a refinement. The refinement was on the 1 minute. On the 1 minute right here, we were just waiting for a 1-minute break of structure. The 1-minute break of structure happened right here because I identified my break of structure from a body closure to another body closure, and then straight away after the break of structure, I identified my new extreme POI. In this case, it was this one. I placed my entry right here, stop loss below the low in this area right here, adding a few extra pips to not getting swept, and then 103 risk-trade ratio was our take profit one. So this is really quick, guys. This is not the trade that I'm focusing on right now, but I just want to show you how it went. So as you can see, we avoided the liquidity sweep because we added our extra pips, and then we hit our 103 risk-trade ratio, and then we came back to break even. But this is not the trade that I wanted to show you today. Let's wait for the POI below, because when the POI below is gonna get hit, so let's wait, but when the POI below is gonna get hit, even if we had a trade right here, it doesn't matter, it's a new POI, right? So same thing, when a POI is hit, so in this case this 4-hour POI right here got mitigated, we're gonna go and wait for our 15-minute confirmation. We're not gonna enter that POI straight away because it doesn't make sense, it might get destroyed, like for example the one above, right? So we're gonna go on the 15-minute and we're gonna wait for a 15-minute break of structure / change of character. So this is the high we needed to break for our break of structure / change of character. Why? It's because this is right here the last low that has been broken, so this is the high connected to this range. So as you can see, break to the downside, we have this range, so now this is the high that we need to break. And like I said, my break of structures are from a body closure to another body closure. So right here we had this break of structure, so straight away what you're gonna do, you're gonna identify your most extreme POI. In this case you can go on the 15-minute, but there is no valid POI on the 15-minute, so you're gonna move on into the 5-minute. If you go on the 5-minute, you'll see that we still don't have any valid POI. We had one here, but it's already mitigated. That means that this POI is no longer valid for another try, so we can go on the 1-minute. And on the 1-minute, you will straight away see that we have this extreme 1-minute POI. It looks already mitigated, but if you zoom in a little bit, as you can see right here, it's not. So this is perfect. So this is your extreme POI, and that's it. You're just gonna place your limit order at the extreme POI. That's the simplest version of my strategy. So you're just gonna place your limit order at the most extreme POI on the 1-minute right here. Your limit will be right here at the beginning of the POI. Your stop loss will be below the low right here, and it needs to be on the 15-minute. So when you go on the 15-minute, you need to add around 1 centimeter to the stop loss, and a little bit more because it's a JPY pair. It's a specific rule we have for the stop loss. So like this, you add a few extra pips around 1 centimeter and a bit more because it's a JPY pair. And then your risk trade ratio 1, so your take profit 1 will be at 103, and your take profit final will be at the hourly high right here, so for around a 125. But it's not over yet, because sometimes price comes close to the entry and then never actually taps the entry and leaves without you. So to avoid those things, you can add 1 extra pip. So right here you see the number of pips for your stop loss, and right here you see the number of pips for your take profit. Every single time I say add 1 pip, add 1 pip, some people, they don't understand what it means. It just means that right here, if it says 16.3, you add 1 pip until it says 17.3. That's 1 pip. And the 0.3 right here, it's pipettes. It's basically 1/10 of a pip. So you add 7.3, and as well, don't forget as well to add your spreads, because in a buy, you do have spreads when price tap a limit order. If you have spreads and your spreads are actually right here, and even if price taps here but your spreads are higher, you will not get tapped in. So you need to, of course, add your spreads. So this is why we had a 1-to-5 risk trade ratio earlier. So perfect, this is your perfect position. So now you're just gonna be waiting for the position to get tapped in. You see right here, it looks like we left, right? It looks like we left without us. But as long as it doesn't hit our take profit final, you don't remove the limit order. If it hits your take profit final without you, this is where you remove your limit order. In this case, this is the hourly high that I selected. I know if you have this break of structure to the downside, technically this is your hourly range. And now you will tell me, okay, but why are you not selecting the next one right here? Because technically this is your hourly high. Let me tell you this, right here there is liquidity, right? There is inducement, there is rest in liquidity. If price comes up in a downtrend right here, you know, we're pushing down and it's already really aggressive, it's most likely that it's gonna come here, sweep the liquidity and push down. And I don't want to lose my 1-to-5 risk trade ratio profits. So it doesn't make sense for me to add this for having a 1.5 risk trade ratio more than having a secured position, and I'm not stressed about it anymore. And it's just the easiest way of doing it. I'm always targeting the closest pullback on the hourly time frame. So let's see what's gonna happen next. So we came back, we tapped into our entry perfectly, as you can see exactly right here. Perfect mitigation, perfect, and then we just pushed up, and just today we hit our take profit final. So we came close as well to get out of break even, because again at 103 risk trade ratio you place your stop loss to break even and you take some partials. But we never got actually stopped out at break even, and we hit our final take profits. So that's it guys, that was pretty much it for this simple trade breakdown. I give you as well some extra tips that I didn't really talk about previously, like for example where to place your take profit perfectly, adding a few pips, your stop loss, stuff like that. So this is my complete strategy. You see, it's really simple, really mechanical. You wait for a high time frame POI mitigation, 15-minute break of structure / change of character, extreme POI entry, take profit 103, take profit final hourly high, stop loss below the entire 15-minute range low, and you add a little bit of extra pips for your spread and 1 pip extra to cover the times that it comes close but doesn't actually tap into the POI. So yeah, that's it guys. If you have any questions, don't hesitate to just ask them in the comments, and if not, I'm gonna see you soon in another episode of Koshkah's Academy of Trading.